Welcome back to the channel. Today we're tackling one of the most debated topics in the crypto world. Can Bitcoin really hit $150,000 by the end of 2025? With so much speculation and excitement swirling around, it's important to break down the facts, predictions, and market forces at play. In this video, we'll explore expert forecasts, historical trends, and the key drivers that could push Bitcoin to new heights or hold it back. Whether you're a seasoned investor or just curious about the future of digital assets, this deep dive will give you a clearer perspective on what's possible for Bitcoin in the coming years. Let's get started. Start with what the experts are saying. Influential voices like Michael Saylor and other top crypto analysts have made bold predictions, suggesting Bitcoin could reach $150,000 or even higher by late 2025. Some forecasts go as far as $180,000 or even $250,000, reflecting a strong sense of optimism among certain circles. These predictions are based on a mix of historical trends, market cycles, and the growing role of institutional investors. But as always, it's important to remember that forecasts can vary widely, and the crypto market is known for its surprises. Major factor fueling these bullish predictions is the 2024 Bitcoin halving. This event, which happens roughly every 4 years, cuts the rate at which new Bitcoins are created. With fewer new coins entering the market, the supply side tightens. Historically, halvings have been followed by significant price increases, as scarcity drives demand. This time, the halving has already reduced Bitcoin's new supply, setting the stage for potential price appreciation if demand remains strong. Another key driver is the surge in institutional demand. Spot Bitcoin ETFs and hedge funds are attracting significant inflows, bringing more mainstream investors into the crypto space. This institutional interest not only adds credibility, but also increases liquidity and stability in the market. As more large players allocate funds to Bitcoin, the potential for upward price movement grows. The big question is whether this trend will continue and accelerate through 2025. Looking back at Bitcoin's history, we see a pattern. After each halving, there's typically a bull run that peaks about a year later. If this cycle repeats, late 2025 could be the period when Bitcoin reaches its next major high. Of course, past performance doesn't guarantee future results, but these historical trends are a big reason why many analysts are optimistic about the next couple of years. It's not all sunshine and rainbows. There are several reasons why Bitcoin might not reach $150,000 by the end of 2025. Macro headwinds such as a strong US dollar, rising global interest rates, or economic slowdowns could dampen investor enthusiasm. These factors can make risk assets like Bitcoin less attractive, leading to lower demand and price stagnation. Not all analysts are convinced that $150,000 is within reach. Some project more conservative targets, suggesting Bitcoin could end 2025 in the $100,000 to $120,000 range. This mixed sentiment reflects the uncertainty and volatility that are part and parcel of the crypto market. It's a reminder that while optimism is high, caution is always warranted. Technical analysis also points to potential exhaustion. After strong rallies, Bitcoin often consolidates or corrects before making new highs. If the market shows signs of fatigue, we could see a period of sideways movement or even a pullback, delaying any push toward $150,000. It's important to watch for these signals as the market evolves. So what are the odds? Let's break it down. The base case scenario gives Bitcoin a 30–40% chance of hitting $150,000 by the end of 2025. If institutional flows remain strong and the market turns bullish, the probability rises to 50–60%. On the flip side, if macro or regulatory risks intensify, there's a 60–70% chance Bitcoin stays below $150,000. These probabilities highlight just how much uncertainty remains in the market. The base case, Bitcoin has a moderate chance, about 30–40%, of reaching $150,000 by the end of 2025. This scenario assumes steady institutional demand, no major shocks to the global economy, and a continuation of current trends. It's a balanced outlook that weighs both the opportunities and the risks facing Bitcoin over the next couple of years. Bull case is more optimistic. If institutional inflows accelerate, market sentiment turns strongly positive, and macro conditions become favorable, Bitcoin's chances of hitting $150,000 jump to 50–60%. This scenario relies on a perfect storm of positive developments, including regulatory clarity and continued adoption by big players. On the other hand, the bear case sees a 60–70% chance that Bitcoin stays below $150,000. This could happen if macroeconomic or regulatory risks intensify, or if investor sentiment turns negative. In this scenario, Bitcoin might struggle to gain traction, with prices consolidating or even declining as uncertainty weighs on the market. One of the biggest catalysts that could push Bitcoin to $150,000 is large-scale institutional inflows. When major players like ETFs and hedge funds pour money into Bitcoin, it creates significant buying pressure. This influx of capital can drive prices higher, especially if it coincides with a period of limited new supply following the halving. Central banks play a crucial role in shaping market sentiment. If they start cutting interest rates, it could boost risk-on assets like Bitcoin. Lower rates often encourage investors to seek higher returns in alternative assets, driving more capital into the crypto market and potentially fueling a rally. Strong on-chain accumulation is another bullish sign. When long-term holders and large investors continue to buy and hold Bitcoin, it reduces the liquid supply available for trading. This scarcity effect can put upward pressure on prices, especially if demand remains steady or increases. Major adoption news or favorable regulation can act as powerful catalysts for Bitcoin's price. When big companies or countries announce support for Bitcoin, it often sparks a wave of optimism and new investment. Positive regulatory developments can also remove barriers and encourage broader participation. On the flip side, regulatory crackdowns or new taxation policies could pose significant risks. If governments decide to tighten rules around crypto trading or impose heavy taxes, it could dampen enthusiasm and drive investors away. Regulatory uncertainty remains one of the biggest wildcards for Bitcoin's future. Deep recession or liquidity crisis could also derail Bitcoin's rally. In times of economic stress, investors often move away from riskier assets and seek safety in cash or government bonds. This shift in sentiment can lead to sharp declines in crypto prices, even if the long-term outlook remains positive. Another risk is Bitcoin failing to hold key technical support levels. If prices break below important thresholds, it can trigger a wave of selling and further losses. Technical analysis is closely watched by traders, and breaches of support often lead to increased volatility. Market sentiment is a powerful force in the crypto world. Positive news, strong adoption, and bullish forecasts can create a feedback loop that drives prices higher. On the other hand, negative headlines or unexpected shocks can quickly reverse momentum. Staying attuned to sentiment shifts is crucial for anyone investing in Bitcoin. Spot Bitcoin ETFs have been a game changer for the market. By making it easier for traditional investors to gain exposure to Bitcoin, these products have opened the door to billions in new capital. The continued growth of ETF inflows will be a key metric to watch as we approach 2025. Hedge funds are also increasing their exposure to Bitcoin. These sophisticated investors often move large amounts of capital and can influence market trends. Their participation signals growing acceptance of Bitcoin as a legitimate asset class, which could help drive prices higher. While institutions are making headlines, retail investors remain a vital part of the Bitcoin ecosystem. Their collective buying power and enthusiasm can amplify market moves, especially during periods of hype or fear. Keeping an eye on retail sentiment is just as important as tracking institutional flows. Global economic conditions will play a major role in Bitcoin's trajectory. Factors like inflation, currency strength, and geopolitical events can all influence investor behavior. A stable or improving global outlook could support higher prices, while instability may create headwinds. A strong US dollar can be a headwind for Bitcoin. When the dollar appreciates, it often makes risk assets less attractive to global investors. Monitoring currency trends will be important for anyone betting on a major Bitcoin rally. Rising interest rates can also put pressure on Bitcoin. Higher rates make traditional investments like bonds more attractive, potentially drawing capital away from crypto. If central banks continue to hike rates, it could limit Bitcoin's upside in the near term. Liquidity is the lifeblood of any market. When liquidity dries up, prices can become more volatile and prone to sharp swings. Ensuring there's enough capital in the system is essential for a healthy Bitcoin rally. On-chain metrics provide valuable insights into market health. Tracking things like wallet growth, transaction volume, and long-term holder behavior can help gauge whether Bitcoin is building a strong foundation for future gains. Bitcoin's fixed supply is one of its most attractive features. With only 21 million coins ever to exist, scarcity is built into the system. As more coins are held by long-term investors, the available supply for trading shrinks, potentially driving prices higher if demand increases. Volatility is a defining characteristic of Bitcoin. Prices can swing wildly in both directions, making it a challenging asset for risk-averse investors. Understanding and managing this volatility is key to navigating the crypto market successfully. Media coverage can have a huge impact on Bitcoin's price. Positive stories and endorsements can fuel rallies, while negative headlines can trigger sell-offs. Staying informed and critically evaluating news sources is essential for making sound investment decisions. Social media platforms are a major battleground for crypto sentiment. Viral posts, influencer opinions, and trending hashtags can all move markets in the short term. Monitoring social media trends can provide early signals of changing sentiment. Business adoption is another key factor. When companies start accepting Bitcoin or integrating it into their operations, it signals growing mainstream acceptance. This can attract new investors and drive further price appreciation. Government policies and attitudes toward Bitcoin can make or break a rally. Supportive regulation can foster growth, while crackdowns or bans can stifle progress. Keeping an eye on policy developments is crucial for anticipating market moves. Taxation is another area of concern. New or increased taxes on crypto transactions can reduce profitability and discourage trading. Understanding the tax landscape in your region is an important part of managing risk. Liquidity crises can strike unexpectedly, causing sharp price drops. These events often occur during periods of market stress or panic selling. Having a plan for managing liquidity risk can help protect your investments during turbulent times. Technical analysis tools like moving averages, RSI, and support resistance levels are widely used by traders to make decisions. These indicators can provide early warnings of trend changes or potential breakouts, helping investors navigate the volatile crypto market. Taking a long-term perspective can help smooth out the noise of short-term volatility. Many successful investors focus on the big picture, looking at adoption trends, technological innovation, and macroeconomic shifts rather than day-to-day price movements. Managing risk is essential in the crypto market. Diversifying your portfolio, setting stop losses, and staying informed about market developments can help protect your capital and reduce the impact of unexpected events. Staying informed is one of the best ways to navigate the fast-moving world of crypto. Following reliable news sources, tracking on-chain data, and engaging with the community can help you make better decisions and spot opportunities early. It's important to remember that there are no guarantees in investing. While Bitcoin could hit $150,000 by 2025, it's far from certain. The market is influenced by countless factors, many of which are unpredictable. Always approach crypto investing with caution and a clear strategy. To sum up, Bitcoin's path to $150,000 by the end of 2025 is filled with both opportunities and risks. Institutional demand, supply dynamics, and macroeconomic trends will all play a role. Staying informed, managing risk, and keeping a long-term perspective are your best tools for success. Bitcoin hitting $150,000 by the end of 2025 is absolutely possible, but it's not a sure thing. If institutional demand remains strong and the macro environment turns bullish, we could see a major move higher. However, risks like regulation and economic shocks remain. Stay vigilant and make informed decisions. As always, remember to manage your risk and never invest more than you can afford to lose. The crypto market is full of opportunities, but it's also highly volatile. Staying smart, patient, and informed will help you navigate whatever the future holds for Bitcoin. Thanks for joining us for this deep dive into Bitcoin's potential path to $150,000 by 2025. We hope you found this analysis helpful and that it gives you a clearer understanding of the opportunities and risks ahead. Stay tuned for more insights and updates on the ever-evolving world of crypto.